Hey, real estate is the ultimate tax shelter. I'm going to show you right now how it's a tax shelter with these 3 reasons. And of course, one of those reasons is the 1031 exchange. And also, you're going to get tons of tax knowledge in this video. Let's go. Hey, Jay Leman here. I talk all things real estate in this channel. And today I want to talk about the 3 reasons why real estate is the ultimate tax shelter, okay? Number 1 is depreciation. You got a physical asset like this, it depreciates over time. The government lets you write that off as a tax write-off over 27.5 years. If it's a residential property, it's 39.5. If it's a commercial property, it's a huge tax savings. Number 2 is that the passive income you get from cash flow or rental income is considered capital gains, and so it is not taxed as ordinary income. And number 3 is the 1031 exchange. So let me break that down a little bit for you. A 1031 exchange, and that's just the section of the Internal Revenue Service code or whatever it is that you can actually exchange a property like real estate for another property of equal or greater value. And if you do it within a 6-month period of time, you don't have to pay any taxes on that.
Pardon?
The taxes are deferred until a later date. Let's say you bought it for $500,000 and you sold it for $600,000. That's a $100,000 gain. You'd usually be taxed on that. If you sell under a year, it'd be ordinary income. If you sell it after a year, it'd be capital gains income. Either way, you're getting taxed. But the reality is this: if you sell it, okay, if you sell it and you 1031 it, you don't have to pay any taxes at that moment on it. You can roll into a $600,000 property, and then you could sell that property for $800,000 and roll it into a $1 million property, and so on and so forth for your entire life. And guess what? You could keep deferring the taxes until you die, and whoever you give the property to inherit, let's say it's your kids, they actually inherit something called a step-up basis when it comes to the property. So if the property's now worth $2 million and they sold it the day they inherited, they would have $0 owed in taxes. Let's say they kept it for 5 years and the $2 million property went to $2.5 million. Well, then they would only pay taxes on the $500,000 gain from when they inherited it, $2 million, to when they sold it at $2.5 million, not the whole $2.5 million. This is how real estate families get away from paying taxes, it's a tax shelter, and create generational wealth for their families. Do you want generational wealth for your family? If so, let's get into real estate investing. Like, subscribe, comment, share. Yeah, buddy.